Penny stock Karen demands to speak to the manager. Okay, guys, this is really amazing. I'm getting emails from this dumb broad who's angry about dilution. There was a rug pull at Nextech. She got scammed. She's already filing complaints with the regulators in Canada. Which is it's kind of endemic of the Canadian snitch culture. You blame everybody else for your decisions. When you buy a stock, it goes up, you're a genius. But if it drops by a nickel, we was robbed. We got scammed. Okay, guys, I'm going to show you this letter because this is really, really incredible. And we can learn. So this is a learning moment. As Barack Obama, the great American president, this is a learning moment, right? Look, I wrote this book. This is a learning moment. It's called 10-Bagger Blueprint. I spent a lot of time writing this. What is this book about? You know what? Look, I'm in the penny stock business 25 years. I've created over $1 trillion in value for investors. That's right. Even for Karen, penny stock Karen, helping thousands of penny stock Karens, make a lot of money, right? And this book tells you everything you need to know about stocks. What happens on the way up as a stock becomes a 10-bagger. I have a chapter here. It's called The Long Road to a 10X, right? It's a long way to the top if you want to rock and roll, okay? It's not a smooth ride, and I tell you exactly what you can expect. One of those things is dilution. And I explained to you when dilution is a problem, when it's not a problem. Look, if you had read this book and if you bought this on Amazon for $15, I priced it cheap. I'm not, I'm going to jack up the price because this is like really embarrassing. I priced it cheap. So morons like Karen could buy the book and not complain, but no, they don't. And I gave her an explanation video to explain exactly what happened, but she doesn't understand. So first, let me show you this email she wrote, and I'm gonna white out her name to protect the innocent. I don't want to. What do they say? Doxing, whatever. I'm not gonna. I could do it. I'm not gonna do it because I'm a nice guy. So hang on a second. Let me get this over here. Let me take this out. Okay. Karen says, I'd like someone from your organization to please explain what's going on with this raise when EG, that's CEO of Nextech, said there will be no capital raise for general corporate purposes. 30 minutes in the video in case you need a reminder. Thanks. Okay, she gives me, okay. Now, this is an interview he did, I think, was it 6 months? I don't know, whenever this was. Okay, fine. Okay. So I send her an explanation. I say, go take a look at the Twitter because that explains exactly, how when a raise is a problem. And what's, by the way, I'm going to address that in just a second. So she's not happy. She's not happy with that. She writes, come on, in the video 6 months ago, there was a clear message that there'd be no risk of dilution. I sense the amount of money EG has spent on promotional content recently was set up for exactly what happened. Dilution. You have zero credibility judging by the number of views you get, the number of subscribers, the number of companies, and the number of companies. And many agree with me, but both of you should be investing. And she CCs, who does she CC? The BCSC in Canada, the Ontario Securities Commission. This is, she's getting all the big guns out to investigate what's apparently a scam. She got scammed. Karen was scammed. Now, how big of a scam is this? Now, let me give you a couple of things first to consider. I'll pull up a chart just so you understand what I'm talking about. Number one is I've dealt with a lot of penny stock CEOs, microcap, NASDAQ, whatever it is. Okay, this guy, the CEO of Nextech. By the way, I didn't even know about the raise, which I'm a little bit annoyed about, but whatever. This guy's always raised money at the right time. And if you notice, the market value, the market cap of Nextech is 80 million plus Canadian, right? If you raise $3 million, at a small discount to the market, that's not dilution, okay? Raising 3 million, I don't know what the math is. I'm not that good at math. How much is 3 million out of 80 million? Is it 5%? No, it's not even 5%. Is it 3%? It's like 3%. It's like a tiny, tiny little raise, okay? Now, I don't know what the guy was saying 6 months ago. It's business. Things change. These are dynamic situations, okay? It's like a wartime. Things change. The territory changes, okay? It's not like what's the famous general von Clausewitz said? I talk about this in my book. No battle plan, no business plan ever survives first contact with the enemy. Okay, you think you got everything figured out, and then shit hits the fan. Or as Mike Tyson said very eloquently, everybody's got a plan till they get punched in the face. You understand that, Karen? Now, 5 months ago, 6 months ago, 6 weeks ago, 6 days ago, who knows what's going on in these companies? These things are dynamic, okay? It's business. It's business. When you're buying these stocks, these penny stocks, you're taking a risk. They can go to zero. And I talk about this all the time. They're high-risk stocks. If you're worried about a tiny drop in the stock, in this case, it dropped. The stock dropped. What is it? From 90 cents to 80. What is it? 10, 15, a 20% decline because the prior placement is priced less. That's how they got to do it, right? Maybe they should have done it at 10%. Well, it doesn't make a difference, right? The point is this: that's the thing's dropping. But guess what's happening? The stock is already going up. Now let me jump to the chart right now. Let me get away from this Karen here. Let me go to the charts. This is so annoying. This is so annoying because you know what's going to happen is, these regulators. Hang on. Okay. By the way, you got to get this book, 10 Bagger Blueprint, on Amazon so that you don't become a Karen. Don't be a Karen. Otherwise, because these Karens, they have a habit. They buy the top, they sell the bottom. And I wrote this book specifically so that investors don't make that mistake. Look, I invested my time. I could have been spending this time promoting stock. I made a mistake writing this book. I should have been spending the last couple of months, going after clients. I figured, let me focus on this. I just want to get this out of my system, get it done, get this out. And apparently it's falling on different. Instead I should have been going after companies I could pump and dump, as you say, right? I could have get a bunch of companies, and I'm actually going to be doing that now. Anyway, look, this book. If you read this book, you'd be making money today. Okay, let's look at Next Tech. Let's look at the Next Tech chart. What is Karen's problem? Okay, the stock bottomed out in June. It was 35 cents. It went to $1. That's not bad, right? You almost tripled your money if you would have bought then, right? Okay. Because they had a raise earlier. That was a dilutive raise in January. That was an expensive raise, and the fund was really hammered that stock. That wasn't a great deal. But look, the realities of the markets are the last 18 months it's been very difficult to raise money. How do I know this? Well, look at very smart CEOs. Look at really like erudite guys who are on the TSX, Skylight Health, raising money, barely scraping by at the bottom. Visibility Group, another winner, guy raising money at the bottom of the market. In multiple tranches. He can't even get his act together. Nobody even wants to give him the money. Visby, that's Jay Hutton, another homeless loser. Fans Unite. These guys moved on to the Toronto Scam Exchange. That's right. They went from the CSE to the famous Toronto Scam Exchange, and they're trying to raise money. They can't raise money, right? I mean, look, this guy, Next Tech, has actually raised money to always, at good prices. Now, the stock went to recently was $1, right? The stock was, where was the stock? Just last week, it was 83 cents was the high. This is the American chart, by the way. The stock was 83 cents. It was last week, 83 cents. Okay. They announced a raise, at a discount. The stock drops. It goes as low as, how low did it go? It goes to 57 cents. Oh my God. This is a disaster. This is dilution. Oh my God. Oh, geez. The world is coming to an end. Look, if you can't, by the way, I did a video. I showed you the video. You go watch the video. If you can't handle volatility, Karen, don't buy the penny stocks. I tell you guys that all the time. Don't stay away from these penny stocks. I don't want shareholders like you. Look, 10 Bagger Blueprint. I wrote this book to educate you. Look, I want sophisticated investors following Wall Street Reporter, okay? Following the penny stock billionaire gang. I want sophisticated investors. I don't want widows and orphans. I don't want, immigrants. Look, there's a low-life degenerate, this guy, Chris Parry, pumping stocks in Vancouver. The guy's a lowlife and another snitch. This guy, his whole thing with what is it, Equity Guru? His whole thing is, hey, I'm going to introduce penny stocks to immigrants, school teachers, students, millennials. Like that's his whole, because the guy, look, this guy obviously has no investment experience. He doesn't know anything about investing. That's why he's pushing risky stocks to people who should not be buying stocks. Now, I'm a little bit more responsible. I think this is risk capital. It's venture capital, public venture capital. I can talk about it in the book. It's public venture capital, Karen, okay? It's not T-bonds. You're not buying T-bonds. It's public venture capital, and there is a risk. Don't buy these stocks if you can't afford the risk. If you're worried about a 20% drop in a stock, oh my God, stay away from these stocks. Now, I'm going to tell you what's going to happen in the future here for the stock, but let me go back to the chart here. By the way, the stock is already bouncing back hard. It's already bouncing back. Let me dive into the 1 hour chart. Yeah, look at this. We got a technical button. I got to be careful what I'm saying here because I'm sure the regulator is going to be watching this video. Now, look, I'm not making any advice. No price representation, but it looks to me like we got an inverse head and shoulders bottom. The stock is already bouncing back. We got heavy volume coming in. The MACD has crossed over. We're still below the moving average. Now, this is the 1 hour daily chart, but it already shows you what's going on. Now, if this was a serious problem, the stock would have really dropped a lot. But the fact is that it's already bouncing back, making up for the gain for this temporary loss is a very positive indicator. Do you understand this? Do you understand? Now, again, in my book, I talk about what happens, with stocks on the whip. What is considered a dilution and what is not dilution. I talk about this. I did a video. Karen, I got free videos. Okay, you don't have to buy my book. I got free videos on YouTube. I'm trying to educate the people. That's right. By the way, if you're a regulator and you're the VCSC, TSX, OCSC, SEC, FBI, look, everything I have is fully disclosed. I tell you exactly how much I make. The links are in the links to my disclosures in the video description below. No problem. Go ahead. This is, I tell you exactly, how much companies pay me. And you can also see that I tell you specifically, these are high risk stocks. And I specifically wrote this book to educate investors so that they become smarter investors. Again, an educated investor is the best investor. I want only educated investors buying the stocks that I am promoting. That's right. The word is promotion. That's right. I'm in the business of making stocks go up. That's what I do. Companies pay me. I could say the nice words and polite language like create shareholder value and market support, whatever. But we know how it works. The companies want their stocks to go up. That's what investors want. Shareholders deserve. The only reason you should be buying a stock is so that it goes up. And I've had many winners over the course of my career. I've had countless, multi-baggers, 10 baggers, even a couple of hundred baggers. In the last 2 years, I've had 10 stocks that went up between 1,000 and 5,000%. If Karen, I don't know if Karen was following those stocks. I don't know if she got in at the top. I have no idea. But look, these guys, as soon as a stock goes down, or even worse, is as soon as I stop promoting a stock, this is a doozy. We got this other clown, gerbil stuffer of Oakville, who was very upset when I stopped promoting. I think it was CBDT or some other stock, which ran up a lot, and he made a bunch of money with that. So he was taking the credit for that. But as soon as my contract was up, and I said, hey, this stock is I can't do any more work. I mean, it's very overvalued. I think it's overvalued. I don't want to be promoting an overvalued stock. I'm not like a Greasy George from Agoracom who takes anybody who hires. I want to promote stocks that I believe have upside potential. So I said, look, these guys, I did my job. I'm going to move on. Sure enough, Greasy George pumps the CBDT. The stock, obviously without the real market support, collapses, right? That's how it works, my friends. So back to the story. I explained to you exactly what is and what is not dilution. Look, all companies at some point, these emerging growth companies are all raising money. The CEOs tell you, we're not raising. They're all raising. It's like, Karen, you heard guys telling you they love you. You know how it really works, right? They're all raising money, okay? I don't care what they tell you, okay? Listen, the reality, my friends, is this. These penny stocks are risky. Companies have dynamic changing needs. It's like the water. Something's always changing. They may have opportunities come. Who knows what? And by the way, a 3% raise is not dilution, okay? Now, what is and what is not dilution? Now, I talk about this in the book. Dilution, okay, so-called dilution is not a problem if a company is in the middle of an uptrend, which Nextech was at the time that they did this raise, okay? So it's not a problem for them. The trend is up. And I talk about this, these stocks usually bounce back now they are derailed for a little while. It's going to take a little while to catch up. Might be derailed for a week. It's probably going to go sideways for a little, it's going to bounce up probably in this range. It's probably going to go sideways, between 70 cents or whatever on the American chart before it can move higher. Now, I'm not saying it's going to go higher. I'm not saying it's going to go to 100. I'm not saying it's going anywhere. I'm saying it has potential to go places. Personally, I believe this could be a $7.50 stock. If certain things happen, I have a video which explains what those things what catalysts need to be in place for that to happen. And there's multiple catalysts in place. Now, dilution is a problem. I'll tell you when dilution is a problem. Dilution is a problem for a deadbeat like Visby, Visibility Group, VSBY is the symbol, Jay Hutton. Now look, that's a stock that was $2. When we got involved in the stock, it was 17 cents. By exposing the message to countless thousands and thousands, millions of investors, literally millions of investors over a period of a year, the stock went up because it had a great story. They had a great story, high potential, a lot of positive things, right? The CEO was a moron. So that's the problem with that stock. He's not a 100-bagger CEO. And the board should replace that guy. By the way, if the board is watching, you guys should replace this guy. He's not the right guy for this. Here's the reality. That stock went to $2. He could have raised the money $2. Did he raise money? No. Then he signed a new contract. This guy, I gave him a very cheap price, by the way, for the promotional program. And with this guy, it was he wanted an explanation every time. What is he getting for? Really, totally ingrate. What a piece of garbage this guy is, Jay Hutton. Anyway, bottom line is he signs a new contract, and all of a sudden, I think somebody sent him a letter from, or somebody said, "Oh, this guy's no good." The Wall Street Reporter, and I think maybe the BCSC may have sent an inquiry because another Karen complained to the BCSC that, "Oh, these guys are scammers. I want to invest." And sure enough, they send a letter. The BCSC, these guys, that's what they do. That's their job. The job of these Canadian, these people, the bureaucrats, is they sit and somebody sends them a letter. They got nothing better to do, right? I mean, they're on the taxpayer salary, right? They got benefits and all that. Hey, let's send a letter. They send out a letter to a company, say, "Hey, we want to know, did you hire this guy? How much you paid him? Blah, 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 blah." Okay, no problem. You could answer that letter. They sent me a letter. Hey, were you paid X? Whatever. No problem. Okay, I had to pay a lawyer it's stupid. Nothing happened of it, right? This is a bunch of bullshit, waste of taxpayers' money. The problem is Jay's got no balls, and Jay stopped promoting the stock because he got nervous, and he was busy with Greasy George from Agoracom. So he figured, I'm going to go on the Greasy George platform because Greasy George from Agoracom took credit for all the wins that we had. Now, the problem is you could see what happened to Visby when Greasy George started promoting it. What happened with Visby? Oh, my God, this is so sad. So actually, let me look at the American chart because this is even better. Actually, I'll leave the Canadian chart. I'll leave the Canadian chart. Bisbee. This is very sad. This is what happens when Karens get involved. Look, we got involved with stock over here. You see this? Let me pop this up. We got involved with Visby. I think it was October or November of 2020. Right? Things are a great story. 17-cent stock starts going up. Got a little ahead of itself, so I had to consolidate. This is normal. I talk about this in my book, 10-Bagger Blueprint. This is the normal thing, but the stock had a 10-bagger potential. Sure enough, it goes to $2. Excuse me. No, I'm sorry. I'm lying. I don't want to be accused of lying. It went to, what was the high? I think it was $1.99. Look, guys, I don't want to be accused of over-exaggerating, over-promotion. Visby only went to $1.99. I apologize. I'm a liar. It did not go to $2. It went to $1.99. Just like Cytodon went to $10.01. Not $10, but $10.01. Now, okay, so the stock goes up. Now, Jay, because he's got no balls, he kind of freaks out. A lot of these guys, they don't know how to handle this. And I talk about this in my book. The 100-bagger CEO knows what to do when the stock pops. They have a plan in place. They have acquisitions lined up. They do a capital raise. They got all sorts of things to do to deploy that, to leverage that, to ride that momentum. Jay had no clue. He's a clueless guy. Anyway, so the stock kind of starts stagnating a little bit. Sure enough, over here, I'm calling him every day. I say, "Jay, listen, we got to stop. We got to get on the program. We got to do a live stream." He goes, "Oh, no. Coming up with excuses, okay? Then he goes with Greasy George. He goes find another Discord pumper. He said basically he's been busy with Discord people and whatever. And where does Jay raise money? Where did Jay? And by the way, I put out a tweet. I was putting out tweets. I warned you guys what was going to happen. It was on Twitter. I warned you what was going to happen with Twitter, with Visby, that this guy, once he stops promoting the stock, there's no market support, no liquidity. He's going to do a raise with an H.C. Wainwright or some other scumbag bank and some other scumbag hedge. By the way, H.C. Wainwright, they're not a scumbag, but they're very nice people. They do great parties, great conferences, but their clients are scumbags. I mean, they're not scumbags. I should say, look, they're providing a need, right? If you're a company, you're desperate for money. When you're desperate for money as a company, people are going to take advantage of you. You're going to get fucked. That's what's going to happen. So this is what happened to Jay. Jay got fucked royally. And he raised his money at, I think, 20 cents. I don't know. It was so sad. I mean, this guy's such a fucking deadbeat. I mean, what a disaster. I think he raised, where did he raise money? I think he raised really at the bottom of the range. Really, what a disaster for this guy. Oh, it's so sad. So sad what happened to this guy. And of course, look, hey, if Greasy George was so effective, if the Discord pumpers were so effective for Visby, why has the stock been in a constant downtrend? Why has it not even stabilized? Why has the stock not even stabilized? Jay, ask yourself this question. Ask yourself this question. Investors, ask yourselves this question. I'm just trying to help. Guys. Look, the problem is, look, when you stop market support, the stock goes down. That's what happened. When you stop effective market support, which is, of course, this company here, Wall Street Reporter, we've been around 180 years, okay? We've been around longer than Canada. All you Canadians, you should know this. Wall Street Reporter was around when your ancestors were still living in the treetops. Your ancestors were still living in the treetops, flinging poop at each other. This is when Wall Street Reporter was already publishing the newspaper on Wall Street, the first financial newspaper. Check it out. It's a matter of fact. Go to the Library of Congress in the U.S. We have back issues from the 1840s. You can read them. Okay, we were in business before the Wall Street Journal by 50 years. So have some respect when you talk to me. Now, this is a 100-year-old tradition that I am the steward of. Not a good steward, but I'm trying my best. Look, I'm just a Soviet immigrant. I'm just a Ukrainian immigrant. Actually, I'm a Ukrainian immigrant. I mean, you gotta have some sympathy, some empathy. Guys, get this book, 10-Bagger Blueprint, so you don't end up like a Karen. I want you to make money. I want you to get rich. Don't make excuses. This is the year to make money with penny stocks. Okay, so bottom line is, I keep getting distracted. Bottom line is, dilution is only a problem for companies like a Visby, which are on a downtrend and they have no market support. If there's no market support, again, if you're a CEO watching this, pay close attention. You don't want to end up like Jay. You don't want to be homeless drinking a 40-ounce, Old English malt liquor, Cobra, whatever it is, from a bottle in a paper bag on the gutter, pissing your pants. You don't want to end up like Jay, right? You want to be successful. You want to be like Nextech. Bottom line is this: the only time dilution matters, raising, is if your stock is in a downtrend. If there's no market support, you're screwed. It's like you're a plane. You have no gas. You have no fuel. Engines are out. I mean, you're losing. You're done. You're done. I mean, you're done. You need to gain altitude. I talked to my 100-Bagger CEO Academy. That's right, my 100X CEO Academy. It's a special mastermind for only superstars. That is a top secret Illuminati group I have for only Illuminati CEOs. I explain this. You got to get altitude, and then you could raise money. A stock like Nextech, they could raise money, no problem. Now, this guy could have raised. I mean, look, Nextech could have raised. I mean, quite frankly, he could have raised a lot of money. Apparently, there's a lot of demand. It's oversubscribed. Because Jay's private placement was no. Jay was not oversubscribed. You know why? Because Jay is a loser from Visby. Okay, well, by the way, we're about to break out of the moving average on the 50. This is the one-day chart. Pay close attention, boys and girls. Karen, pay close attention. The MACD is about to cross over. This is the daily chart in Canada, the Canadian markets. This is very bullish to me, this chart formation, very, very bullish. I'm going to show you the Japanese version in case you don't speak English. This is the Japanese version. I love this. To me, this says this is ready to pop. This thing looks like it's ready to pop. Now, again, if you're a company that the stock is going up, you're in an uptrend, it's not a problem. You can raise whatever you want. Again, Nextech could have raised a ton of cash. Now, Karen, ask yourself a question. Why didn't Evan raise when it was here? He could have. Yeah, maybe he should have. I don't know. But he already had money. He just did a raise a few months. He didn't need the money, right? Sometimes, a smart CEO raises money when there's momentum with things, because you don't know what's going to happen tomorrow. Look, the economy is very treacherous right now. All the tech companies are laying people off. They're losing customers. Okay, we're in a treacherous economy. Karen, your house is probably going to get repoed next week because, I don't know, you're making bad decisions. No, I hope it doesn't happen. But look, the reality is this. It's a very treacherous economy. You got to be conservative. This guy made a smart decision. He raised money. When the ducks are quacking, feed them. That's an old Wall Street expression. When the ducks are quacking, when there's demand for the stock from institutions, guys are calling you up saying, hey, we want to buy shares at a discount, maybe, whatever it is. We like the story, but we want to get in cheap. That's really how it works in Canada. Look, Canada is a corrupt country. The way it works a lot of times is, you have these funds, they want to get into a stock. They don't want to buy in the open market because they're greedy, which is okay. It's fine. They're greedy. Everybody's greedy. They want to make money. So here's what these guys do. They start shorting the stock, right? They start shorting the stock, and then they call up a banker at a firm. They know that this is the banker or this company's bank or whatever it is, right? And say, hey, look, guys, see if Next Tech wants to do a private placement. I'm a buyer. I'm a buyer of 2 million. I'm a buyer. Count me in for 2 million. If they want to do a PP, I'm a buyer for 2 million. Now again, I've never heard these conversations. I'm sure this is how it goes. The guy shorts the stock. He shorts the stock at 80 cents because he wants to get in. He wants to get in cheap though, right? He doesn't want to really buy. So he shorts the stock at $1 in Canada because of the Canadian Trump. Guy starts shorting the stock at $1, right? Yeah, he might be short, a million shares or whatever it is. And then he says, he calls up, the banker. He says, let's do a price. They do the placement. So now he makes money on the short. You see how smart these guys are? They make money on the short. They load up even more. And now they're in at, what price did they get in at? They got in at like 80 cents. So they were shorting. They made 20 cents. They got into a PP. They got a free warrant. It's like it's like one of those movies. It's like Scarface or one of those gangster movies. There's a drug deal, goes bad, and so the guy gets the money. He shoots the guy, gets the money, gets the cash. He's got the money and the cash. You got the cocaine, you got the yayo, he's got the money, you got the dinero and the yayo, and now Tony Montana's happy. Now Frank Lopez is happy. That's how it works, right? So these hedge funds are smart. These guys made a killing, and you know who got screwed? Who got screwed? I'll tell you who got screwed. The people who did not read this book, who were not prepared. If you did not read this book and you sold stock, you know who you should blame? Look in the mirror. Look in the mirror. Blame yourself because you had knowledge. You didn't even have to buy this book. You didn't have to buy this on Amazon for $15. 5-star reviews, bestseller, #1 bestseller on Amazon for 1 week. #1 bestseller. You could have gotten information for free. I got videos everywhere. I'm giving out free information. I'm doing God's work for Canada. I mean, God wants me to help Canada's investors, and this is how I get treated but this is how it works. Look what happened with Jesus, right? Jesus, tried to spread the good word, and look what happened, right? I mean, look, guys, this is no good deed goes unpunished. There's an old expression. I'm trying to do the right thing for investors, for the Karens of the world, and the penny stock Karens refuse. They refuse to get educated. I have free videos, information everywhere, what to expect from these stocks, why these stocks are risky. But no, they blame others. They write letters to the regulators. Karen, listen, I hope you sell the stock. I hope you lose money. No, I'm kidding. I hope you make a lot of money with Next Tech. Anyway, by the way, just on a side note, I will be taking legal action against some people in the coming months. My memory and my resources are long, and I have no problem filing serious litigation. I've sued major companies, New York Stock Exchange listed companies. I've had really significant settlements. So I will be going after some people. I'm not mentioning any names, of any people, but I have very, very excellent counsel, litigation counsel, who will be taking action. So be warned, my friends. Okay, have a nice day, everybody. Make sure you get a copy of 10-Bagger Blueprint so that you become a penny stock billionaire and not end up like Karen.